Welcome to the Business with Beers podcast. This is the place where we help entrepreneurs expand their business, build their wealth, and generate passive income. I'm your host, Brian Beers, an entrepreneur who's on a mission to inspire growth from everyone around me. Remember that you need to take the actions others won't, and you can live the life that others don't. Please be sure to check out my weekly newsletter that now drops every Thursday. It includes one quote, one tweet, one podcast recommendation, plus some business and investing insight from me. It's short and it's sweet. My goal is to provide you with just a couple gold nuggets to help inspire your growth. Go to brianbeers.com to subscribe. Hello, everyone. I am excited today to bring you Pasha Esfandiary. Pasha was a professional poker player turned entrepreneur. He is the co-founder and CEO of Evoke Capital, a real estate investment firm with over 300 units under management. Welcome to the show, Pasha.
Thank you so much. Sorry, I probably sent you an outdated one that's 950 units now.
950? Holy moly.
We probably got to get a little bit better on updating our website, but we've been taking down deals.
Okay,
so
good. Well, I teed you up for that one. So good job.
Thanks.
So prior to your 950 acquisitions, can you give us an idea of your journey from 18 years old to graduate from high school? Like, kind of walk us through the next kind of chapter of life before today.
Oh, crap. Where do I start? So 18 was a very interesting time for me. I don't know why I'm going to say this on this podcast, but I just hit puberty. Like at that time, I was a very late spouter.
Okay.
And so I also had, ADD. I still do. It's just really hard for me to do school. So I went to community college for one semester and I dropped out really quickly. I had really no idea what I was going to do. When I was 19, right around there, my older brother, won a really big major poker tournament. So I said, oh crap, if he could do it, I could do it. Right. So started to just kind of dabble and play a little bit of poker. And that led me to, going all over the world. Ended up settling in Houston when I was about 20 years old. And I just started playing poker until about I was 25. Made really, really good money for being, early 20s. And I also blew it as fast as I could make it. So that was quite an interesting time. Moved to Las Vegas when I was 26, because even though I was at 25 years old and I was making really good money, I was depressed. I hated my life. I was living with an ex-girlfriend that we hated each other. And I said, this isn't for me. Like, this is a really low point. I'm 25 years old and I haven't done anything with my life and wanted to take my life a little bit more seriously. And it's kind of funny how the universe just works. When you're ready for something just appears in your life. I was ready to take my life seriously. Right when I moved to Las Vegas, I ended up taking an emotional intelligence course that changed my whole life, really got me in touch with who I am, let me process emotions, really created a lot of goals. And the journey of who I am really started in that moment when I was 26 years old. Made a commitment to myself to live the biggest life I could. And at that time, I always knew I wanted to get into real estate. It was always the end game for me. Ended up getting my license just to get education around it and understand it, get access to MLS. Ended up being an agent for 6 to 8 months, sold a bunch, natural networker, and then used that money to buy my first investment property flip. And then just kind of transitioned to where I am now. I started being a developer about 6 years ago in Los Angeles, land up construction. And then I have recently switched over only and strictly into multifamily, and then now only and strictly mobile home parks. So I started buying about close to 14 to 16 months ago. And now I'm sitting on 950 units.
Wow. Okay.
Yeah.
So if you had ADD, how'd you sit at a poker table for that long? You could concentrate on that, like in the moment? Like, was that different than?
It's hard. It was actually quite difficult because there are moments that I had a bunch of adrenaline rushing to me so that I would have to stay very focused. But here's one thing. This is a really good question because part of ADD is just the lack of adrenaline going in your brain. And so what I would do is I would do really, really well in my life, like when I was playing poker quite often when I was younger, but then I would self-sabotage just so I had to build myself back up. And I realized this is a very big common trait for people who have ADD. So I was always self-sabotaging myself because I would have to kick in the adrenaline and work harder and make it. So, and then, just like on a day-to-day basis, when the cards were running dry, I was so bored out of my mind. I was always just talking and trying to entertain myself somehow. That's why I never did well in tournaments, and I only and essentially stuck to cash games.
Interesting.
Yeah. It wasn't easy.
I can imagine. And then that was probably part of your lifestyle too, of spending all your money. So you had to go broke. So then you had to have the adrenaline probably to go earn it again, right?
Yeah. And also, I also found myself, I mean, now that I'm older and I understand what I was doing in the moment and not understanding it then, I would drink a lot at the table. I would, try to party at the table with everybody else, or try to create like an environment where I could be distracted and also just at the same time being focused. Because one of the things I could do is I could drink so much at the poker table and still stay focused compared to others.
Interesting.
Which was an advantage and a disadvantage sometimes, as you can imagine.
Yeah. So in the real estate game, you've pivoted a couple times. So you've developed from what I guess it started with selling, which is temporary. You went to flips, and then you went to development, and then now multifamily, specifically mobile home parks. That's correct. And of your 950, is it like almost all mobile homes? Do you sell everything else, or is it just it's anything new is now in this category? Yeah, I have about like 520 that are mobile home lots. And then the other 420 are just apartment complexes. I also do have a little boutique motel in Las Vegas as well. Okay. And is it all, and I guess in terms of the funding, is it syndications? Is it your own capital? Is it joint ventures? Like, what does that look like in terms of ownership? Yeah, so the majority of it is my capital up until just recently when I started to syndicate, because I built out the team and I really see a future here in mobile home parks, and we've discovered a niche, and so we're attacking it. So only recently in the last 6 months have I started grabbing other people's equity in our syndication models. Okay. And so why mobile home parks? Yeah, like why not, right? Like, I mean, that's the thing. So one, I don't think mobile homes park is for everybody, because there is a lot of headaches that kind of go involved with it. You are dealing with a different kind of class of clientele. But for the most part, these stigmas that you have on it doesn't mean that every single property is like this, right? So for the most part, mobile home parks are essentially the backbone of America. Like, they're blue collared workers. They're just trying to get by. And it's situated and positioned in a way, in my opinion, in commercial real estate, that the supply is actually dwindling because no one's really building mobile home parks, and the demand is increasing. We know the wealth gap is increasing. So I've always been very attracted to low income housing because it typically provides me an opportunity to help out, people who are really in need. You hear all the bad stories about slumlords and all that. I treat all my guests or my tenants like gold. But secondly, on the capitalistic side, it tends to yield me more cash flows. And so I've always been more of a cash flow investor. That's what I've been attracted to. That's what I'm focused on. So it kind of has the duality of both, satisfying both of those needs for me. Okay. And where are they located? What part of the country? Oh, everywhere. I have one in Arizona, a few in Alabama, Ohio, Kansas. Just kind of spread out. Okay. And then what does management look like on these? Because I would imagine it's a lot more hands-on, right, than a typical multifamily, or is it similar? No, it's actually opposite. It's actually, in the beginning, there's always a lot of work when you get a project that's a value add or they're operational, you need to go in there. But once you get it to the point where, we're everything's self-sustaining and everything's good, it's actually a lot less management. Because you think about it, the tenants actually own their own mobile homes. So we only own the land. So we're only dealing with the utilities and the land and the common areas. We don't deal with repairs and maintenance. We don't deal with move outs and move ins. Typically we will. Obviously, that's part of the game. Some people will leave and some people will come in and whatnot. But our ratios of our expenses are about 15% less than what it is in the multifamily. Okay. And I know for some of the research I've done, a lot of the opportunity is increasing the rates, right? They're at whatever, $200 a month, and it's going to $400 a month or whatever it is. So I guess that'd be very aggressive, or whatever it is, right? So how do you balance that thing for you guys? You're looking to get a return while still making it affordable for the residents that are there. How do you balance that in your mind? That's a really good question. So one thing I will say, like kind of just pertaining to what we just talked about, there are operators that will go in there and jack up the rents about 100%. That is something we definitely do not do. But let me give you like a real life example for us.
we, typically our lot rents are around 300 of what we find in our mobile home parks. We're increasing our rents by $30 per year. And on a 5-year pro forma, that means we've raised it $150, right? Over 5 years. That's still 50% of what it already is now. That's a lot of money, especially with the way the cap rates are going or at right now. I don't know where they're going, right? So there's a lot of juice there. Secondly, and what we're finding out is essentially that we're only and have bought from mom and pop sellers who are really bad at operations. Us and my team and Evoke, we're very good at operations. We know exactly what we need to do. We exactly know what to budget. We're always very conservative. And so we're always able to, we're finding time and time again that all of our numbers are coming in under what we budgeted because we're just, very good at operations.
Okay. So you're looking to increase the sales slightly, 10% or whatever, but really you're finding the dollars and the value add more in the operations of spending less money, making them more efficient.
That's correct. Compounded with, in a 5-year pro forma. Yeah,
okay. So what are some of the operational things that they're bad at? Like lots unused, there's unused lots because utilities aren't there. Like what, can you give me some examples of some like easy fixes that you had?
Absolutely. The lowest hanging fruit is that typically they get scared. A lot of these owners are getting scared to raise the rents on their tenants because no matter what, if I raised it 300 or you raised it 200, all the tenants are going to complain and they're going to get mad at you. And they actually get scared. In markets, we know that you should be raising it $40, $50. There's still landlords that are raising it $10, $15. So they're so behind the ball of where the market rents should be. And then secondly, it's just the way and how much they pay for labor, how much they're paying for all their renovations. And a lot of them is the utility bill backs. They're just not utilizing it correctly whatsoever. Okay.
So they're paying the whole water bill instead of having the tenants
or they're
pay.
Just giving them a minuscule amount.
Like here's $5 and it's 50.
Yeah. Okay. Typically, they don't want to rock the boat in any way, shape or form. They're scared to rock the boat. And so the tenants kind of taken over.
Because they're afraid of turnover?
They're afraid of turnover. Yeah. Because it's a pain in the butt. But when you have your operations and your systems down, it's not that big of a deal.
Okay. So how do you go about finding, are these off market? Are they broker listed? How do you go about, or what's like the strategy look like?
I'm strictly just a relations guy. So it's all broker relationships.
Okay. So it's not, they're talking to these people about selling, and then is it still off market though? Are they kind of coming to you first?
Yeah. So out of the 7 that we have right now, 5 of them have been off market with brokers.
Okay. Now, being all over the country, are you going out and trying to find the guys like in Alabama and Arkansas and Ohio, wherever? Because there's probably not national brokers, right? These are probably local guys, I would imagine.
Yeah, the mobile home park game is actually it's kind of a condensed group of a few big groups in America, and so we're always constantly calling. Let's say like Crexy is an easy one. So anytime Crexy comes up with a new listing, I just call the agent and just say, hey, who are you? This is who I am. And I just try to build a relationship with them. Right. And that's how it works always.
How do you go about competing with like Brandon Turner and his gang of trying to buy, X amount, right? And they've made 500 offers in the year and they bought 25 or whatever it is.
Right.
Because there's a lot of consolidation in the space, right?
There is.
These bigger players like him, like you coming in. And so how do you go about and compete that to not just, pay like crazy numbers for these things?
Right. So that's the thing. So we operate in secondary and tertiary markets pretty primarily. So, and because of that, a lot of institutional money and a lot of investors don't like to go to these secondary and tertiary markets, because what I've noticed is a lot of people will have the same lens that they do in multifamily. They need a ton of population. They need a ton of population growth. But in mobile home parks, it's very non-transitory. So the tenant base stays there for a long time. There's a stat that 50% of all mobile home park tenants have stayed in their homes for more than 14 years. It's a very consistent game, right? So market is very important to me, but it's not the most important thing to me in the sense of in a mobile home park. When I buy my apartment complex, it becomes the most important thing.
Okay.
So we're operating underneath institutional money.
Okay. So Brandon and all those guys are looking for a kind of the next level up, you think, in terms of size and locations?
Yeah, I believe so. Yeah.
What's your target? Like how many pads or what's the size that you're looking for?
Yeah. Minimum is 75 up to like about 180, 200.
Okay. Cool. That's interesting. What's the game plan? Like what's your, I have a note here and some 10-year increments of your plans. What's your like 10-year plan on this thing?
Yeah. So my immediate future plan is to get Evoke to about 5,000 lots, build out the team. There's a lot of charitable give backs that we have planned in the future, nonprofits we're going to create around it, creating some online systems for education, a lot of stuff that Aaron Velke teaches as well too. Stuff like that. Yep. There's some other things that, I have goals. I think Evoke has some big goals as well too, but that's an ever expanding and a goalpost that's keep moving.
Okay.
So the immediate one's 5,000. Our big term goal is 15,000.
Okay. Where does that place you in terms of like some of these other players?
I have no idea.
Okay.
I have no idea. It's funny. It's like one thing I've never done in my life, even in my poker world background, I've never cared what anyone else is doing. It's funny because when I played poker, everyone wanted to talk to me about, do you see this poker player doing that? You see that poker player doing that? I just said, I really don't care. It never really bothered me because I'm just seeing what's my goals.
Yep. That's awesome. Yeah. It's good. It's a good lens. Any other like things in your background of playing poker that you think apply to being an investor or, the way you look at opportunities?
Yeah, of course. So one is that you have to be aggressive, right? Let me tell you what I mean by be aggressive is that you have to be in the game and you have to go attack your goals. Cause like if you're playing, let's say a poker tournament, if you're not aggressive and you're not getting cards, you're just going to get blinded off and you're just going to lose in the game, right? Let's just say lose a game of life or financial building or something, whatever. So you have to just be aggressive. Like you have to make moves to go and accomplish goals. That's like one thing. Secondly, I think the way I look at risk and the way I attack life is because of my poker background, how I evaluate things and the way I look at things. If I see something, or if I see let's say I see a weak spot or a weak player, I'm just going to keep trying to get myself in the position to keep attacking that weak spot. And that's what I'm doing in mobile home parks, because really, apartment complexes, cap compression has collapsed. It's just so tough in the apartment complex game now. And switching over to mobile home parks game, there's less competition. So I will always go where there's less competition and more rewards. I've done that in flipping my homes. When I first started, found myself a lot more attracted to half burnt homes or hoarders that, in the home. When there's more of a headache that you have to solve, you get more rewards.
Yep.
Same with land up construction. In LA, I moved here and I went from in Vegas being like a big fish, and now I'm like a small fish in a massive pond. And I try to flip these, like I flipped one home and I realized the competition is so stiff here. Everyone's so good. Mm-hmm. So then I bought some land that I felt very good about what's going to do and appreciate in the next 5 years. And I just started doing land up construction there, and it served me really well. I will go where there's less competition and more rewards.
Yeah, that's a good message. And, you get paid in correlation to the value you create, right? Yeah. So if you create more value, you can get paid more. And same for, that burnt up house that nobody else wants. Like there's a ton of value there to be created to make it livable and to make it home again. And that's where the money's at, right? Yeah.
That's how I've lived my career. That's how I've made all my money. I've solved the bigger headaches that most people don't want to solve.
So how do you go about then like, I don't know, so for somebody who's going to take on this risk, how do you then analyze it to I guess, have confidence in your ability then to say, hey, there's risk here, right? But I'm confident that it's, I'm not going to get burned on this deal.
Yeah. I think the best way to describe that is be very conservative in your numbers. There's enough There's no one answer that can solve this, but there's enough education out there on podcasts, on Bigger Pockets, on training programs that you can get your numbers correct. And when I say by that is you will have a great idea of what your numbers should be, and then you can build in a lot of cushion. That's what I did when I first started. When I bought my first home to flip, I was so conservative. I probably put it off because it was auction site unseen. I probably put offers on like 250 homes because I was so conservative until I got finally the first one. And then because of that, I said, oh, okay, I can really adjust my numbers. And with experience, I was able to refine all of them. But there's enough education out there that you should be able to understand what you're getting yourself into, and then just be patient. Don't buy a property just to buy a property to say you're doing it. Stick to your numbers, stick to your metrics, and then go from there.
Yep. That's good. So do you plan on selling the other multifamily?
No.
The houses, you keep those too?
I mean, I may, 1031 hire, but typically if I buy real estate, I want to keep real estate long-term. And that's one thing I do in the syndication models as well too. It's not like a value add. We buy and sell. We get in there, increase the equity as much as possible, give the investors back all their money. And then we want to keep it like for long-term passive income.
Okay. Yeah. Cause one of the things as you kind of grow and you learn more things, right? You get so many opportunities but then the more opportunities you take on, sometimes the further it then dilutes you, right? And it becomes distractions. And sometimes, you can make more money by just going deeper into that single thing that you're really good at.
Correct.
Versus, kind of being mediocre at a whole bunch of things. And, but a lot of it's the management. Do you have systems in place where it's not a distraction so you can focus on, the syndications or, acquisitions or whatever it is?
Yeah, absolutely. Once I learned to delegate, everything unlocked for me.
Yep. What does your team look like?
So I have EA, essentially, that does a lot of work for me. I'm like basically my right-hand man. And I have another co-founder who's essentially the brains of the operation, analytical. And then we always have on-site management for it. So it's pretty lean. We're actually making a new hire as of yesterday, a VA to help with the operation side.
Okay. It's not bad though. If you have two people and two VAs and, then obviously you have on-site staff, but from a management perspective, that's pretty good. So
yeah. Mm-hmm.
You mentioned earlier kind of about emotional intelligence and how that's kind of impacted you. Could you speak a little bit more, on that?
Sure. I don't know how to describe it or which route I should go. I mean, I think emotional intelligence, the best way to describe it is learning why you do what you do. Okay. And that's really important for me. The best example I ever give on this is that if, let's say you're in a classroom setting and you're in 5th grade and you raise your hand or earlier than that, sorry, you're 5, 6, 7 years old. You raise your hand, you give the wrong answer. What does everyone do? Well, the classroom laughs at you, right? So when you're 5 years old, let's say, you learn very quickly not to raise your hand because everyone will laugh at you. So you're embarrassed. You make an emotional decision that sticks with you at 5 years old because you're embarrassed, and you reinforce that pattern until you're an adult. So even today, you don't want to raise your hand because of a decision you made when you're 5 years old, right? So when you're now as an adult in a meeting or in a seminar, you don't want to raise your hand, who's really controlling you, the adult or the child? Well, no, it's the child, right? So emotional intelligence is going back to those moments and making a different decision in an emotional way, because we make our strongest decisions of who we are as humans when we're in an emotional state that we've just reinforced the pattern over and over again. So for me, I had a lot of self-sabotaging patterns. I had a lot of insecurities. I was very, very depressed. And I think that word gets very tossed around very easily nowadays. I was, it was really a very, very dark time for many, many, many years of my life. And I think it saved my life. Absolutely. So I was able to reset all of my emotions. I was able to start to feel again as a person. I was able to start letting love into my life because I had no relationships. I was on, believe it or not, I was on social anxiety medication when I was always afraid of people. I mean, so it really kind of catapulted me into where I'm at now. And then, so while I was doing the emotional intelligence, while I'm having all these big breakthroughs, a mentor said, hey, listen, I know your goals in life that you have, but you may want to think about doing this work for 2 years. And what will happen in those 2 years is that it's going to become part of you. It's going to become part of your being. Like, it's just going to transform you in a big way. And so because I look at my life in big life chunks, 10 years, 20 years, I said, this is the best thing I could do is create this foundation for me. So I coached for 2 years. I did every course that I could do. I did every Tony Robbins. I did everything that I could humanly do for 2 years to create a new life for myself. And that's what I did.
And how long ago was that?
That was about 11 years ago.
Okay. And then when did you get into the real estate game? 11 years ago?
Right about 11 years ago.
Yep.
Yeah, like 10 years ago.
Yeah. Yeah, I mean, that's a great story for anybody. You know, it's like you can change whatever path you're on. That's for you. Correct. You literally hit the reset button and then, but did a lot of work to get there too. It's not like you just read one book and you're good to go. I mean, it takes self-discovery and education and kind of commitment. And
I was a sponge at that time, right? You know, it was not easy. I even volunteered for 3 months for free to go and learn how to do investing, right? I was in their office. I just was doing whatever they needed me to do. But the mentor of mine who gave me the opportunity, I was there every single day. I was trying to learn as much, and he'd only have one weekly meeting, an hour for me. But in those 3 months, I learned so much to become who I am today. But yeah, it wasn't easy.
Yep.
But anyone can literally change their life. It's not easy, but it takes some work, but it's super rewarding.
Yeah. So on a personal level, what are some of your big personal goals right now in these timeframes, or however you look at it? The shortest term goal is that me and my wife are trying to have a kid. Actually, I'm trying to have twins. So I'm super excited to be a father soon. Not that she's pregnant yet. But that's the biggest step. I just want to be a father. That's number one thing for me. Plus I have a lot of goals. There's a lot of things that I want to do and create for low income communities. I want to develop my own communities where there's a lot of components of give back on there, because I have a fundamental belief, which is probably contrary to a lot of people's, money matters, but it doesn't really matter. I can't die with it. I always look at my life and I look back to when I'm going to be on my deathbed, and I try to work my way backwards. What's going to be the most meaningful for me? So what's my impact? And then there's other businesses that I want to buy as well too, and get into. But at this point in my life, Brian, it's like I can't believe I'm here. And if you asked me 10 years ago, I would have said bullshit. There's no way I'd be here in 10 years. So when I look at that, I'm 38. I still have another good 40 years of just building something and investing and creating. So if I could do this 10 years and where I'm at now, I could just do anything. So I'm kind of going for it on all my big goals. Yeah. I think it's Tony Robbins that says people overestimate what they can get done in a year, and then underestimate what they can get done in 5 years or whatever the time frame is.
100%.
And even for your goal setting too, I mean, that's all part of it, right? Is if you look too far, you can say, I can't do that. It's too big of a goal. But in reality, there's these compound effects, and life is not linear, it's exponential, where you can have these things that happen that just catapult you. So it's, I think that's a good philosophy to not plan 100 years or 50 years or 25 years, right? You're just planning kind of these smaller increments and say, hey, what can we get done? Right.
Yeah, that's exactly what happened there. I mean, you and I are both part of Go Abundance. I was actually having a dinner with James Adune and Go Abundance. I give him all the shout out to this. At a dinner, I'm telling him about my big plans that I want to create these low income communities, these developments where I can teach emotional intelligence and have these nonprofits set up around it. He goes, what are you doing, man? Why don't you just start buying some low income housing now? And that's what got me into stop developing and buying some of my first low. I was like, oh yeah, you know what? I don't need to accomplish this huge goal now. Let me go learn the system. Let me go understand what these tenants need, and let me understand the way, and also build up my short-term goals for me and my family. And then I can do it in 5 years. And that's kind of how this all progressed, Yeah.
So. Yeah. I think a lot of times it's, progress over perfection. And sometimes I think we wait too long because we want perfection. We want this perfect thing to be ready, but progress matters more. Buy the first one, buy the second one.
Yeah.
Start with one group of people rather than saying, hey, I got to build out this whole course. And you set this huge thing. I don't know. For me, I want to see progress of little things, and without perfection having to hold you back.
Yeah, absolutely. I don't know if you're anything like me. If I'm not progressing in some way, I'm dying. It's
yeah.
it's
No, it's
like
on the
how I feel.
saying progress equals happiness, right? Like,
Yeah.
and, but I think for a lot of people that's it. Maybe they don't even maybe realize that too, that, they're not happy. They can't identify why, but it's really because they feel stuck, and they're stuck because they're not progressing. But then maybe it's because, there's all these other factors. Are they around the right people? Do they read new books, or are they just like scrolling on Facebook all day or watching YouTube and not actually taking the actions necessary to make that progress?
Yeah, exactly.
So I think even groups like Abundance, I mean, I've progressed huge since I've joined 2 years, having a coach, we talked about there, and all that stuff, there are investments you can make in yourself that help get you there. So
absolutely. Plus also the information is all online, and it's easy to set goals. Just start somewhere, start making progress. It's baby steps. And it's like a snowball effect. It keeps getting bigger and bigger and bigger.
Yep. It's awesome. So what do you, in terms of education, any books that you'd recommend to people, either on the personal development side, the business side, ones that just you enjoy?
Yeah. Think and Grow Rich. I read every single year. This book itself, it translated into how I view risk, and it always catapulted me to taking bigger and bigger risks. I'm an avid journaler because of this book. The second book that's coming to mind is Price of Tomorrow by Jeff Booth. Just a great book on how the macro economy works and how technology always wins, and it's awesome. And then there's Die with Zero by Bill Perkins. He's a really good friend of mine, which just changed my everything how I view money and experiences, and the way he essentially kind of tries to map out the best times to spend your money and make money. Because, his philosophy is why it's asinine that people save up so much money to retire and then go travel the world when they're 65, 70, when they cannot enjoy it to the fullest. Why would you ever do that? Go spend the money now, because that's all that's going to matter at the end. You can't die with it, right? So it's quite fascinating, really. It kind of changed everything on how I look at my life and experiences.
Do you think any of that will change when you have kids?
I mean, I would like to say no, but who knows?
Yeah.
But
it's because you don't die with the money, but if it helps your kids, right? That's I don't know. Then it's do you build this thing, or do they have to go out and build on their own?
Right. Yes. It's interesting. I'm going to give my plan as of right now is I'm going to give my kids something, right? But I also want them to make it on their own, because I got so much satisfaction at it. At the same time I say that, I also understand that it's their life. Maybe they don't want that, but just to support them. So I don't know how that's going to go. I don't know what I'm going to do there.
And you're a couple of years away. So it's not too worried. And talk to me about a little bit about the syndications. What's a typical deal look like? If someone wants to invest with you, just kind of what does it look like?
Yeah, I mean, so with our syndications, kind of like I mentioned a little bit previously, we do work on secondary and tertiary markets, but we do find we actually don't go in for the huge value add, huge infill properties. We do want something that's already operationally working, but we can go in there and maximize everything. That's where we're finding a lot of juice. So typically, if anyone wants to get involved, you can just go to the website, www.evocapital.net. There's a form there you could fill in for investor emails. But our strategy is a little different. Like I said, we don't go in there and we're not going to just sell it. We want to keep it. Our whole structure and everything we do in our syndication models is we don't get paid until the investor gets paid back completely in full. We don't take anything above the pref or anything like that. So it's structured so that we are incentivized to get you the investor's money back, and then after that we get rewarded on the back end. But our plan is to always keep it long term.
Okay, so then do you buy it? You then all the cash flow goes to the investors minus some sort of asset fee, probably.
No, we don't even do asset fee. We'll do a acquisition fee up front.
Yep.
But then after that, all pref and all cash flows go to the 100% to the
investors. Then within a couple of years, I guess your goal is to refinance it, return all the capital. Yeah. Now, everyone still owns the property. Investors got their money back, and now you have debt, obviously, so your cash flow is less. at this point. But now they've got their money at infinite return, and now you're making money off of it.
That's correct. We always do a pro forma of 5 years. We're very conservative in our numbers. I think that's something all the investors that work with us already know that at this point.
Okay. But not to sell it, because a lot of the typical syndication apartment deal is 3 to 5 years. Instead of refi, you're selling it. Everyone gets their capital, pays taxes on it, and then you flip. It's like flipping them basically on a 3 to 5 year timeline.
And I get why they do that. It's easier to do that. I mean, things change. It's easier to get in and get out as a syndicator. You get your money and everyone's happy. But for us, our model is that we want to keep our hands on as much good property as we can and recycle our money every 5 years.
Through refinance.
Through refinance, yeah.
Yep. Okay.
That is the way to true wealth, in my opinion. And that's what we're trying to create here.
All right, cool. Well, I'll definitely check it out. What was that? What was the website again?
Yeah, it's www.evokecapital.net.
Okay. And that's the best. Is that the best way to get in contact with you if any other methods?
Yeah, or LinkedIn. I'm always active on LinkedIn. I'm always checking that.
Cool.
Yeah.
Awesome, man. Well, I appreciate you coming on and chatting and sharing your story. I think this is a great one. And I learned a lot about mobile home parks, and
all right.
I'll be in the loop on your next deal, hopefully. So
I appreciate it. I'll see you in Detroit.
All right, I'll see you. That's all we got for this episode with the Business with Beers podcast. One thing that would really help both us and other new potential listeners is to rate the show and leave a comment in iTunes, Stitcher, wherever you listen. Also, make sure to link up with me on your preferred social media platforms, LinkedIn, Instagram, Twitter, Facebook. You can find all my links at brianbeers.com. Please just share the podcast with anyone who you think might enjoy it. And until next time, remember to take the actions others won't, to live the life that others don't.